Ed, you told us last week you wouldn't have been surprised by a 100 basis point cut from the Fed. So given that, and given the volatile action that we're seeing even just this morning, do you think that the Fed needs to continue to cut and step in again here, or does this sound like a job for Congress on the fiscal policy side?
Well, I don't know that the Fed needs to do it, but the Fed probably will do it because, as you folks were discussing, the Fed does respond to market pressures, and the bond market, the stock market, they're all calling for further rate cuts. So I think we'll probably get another 50 basis point cut at the next meeting. I don't know that they're going to knee-jerk respond to today's sell-off and do it before the meeting. I think at some point here, if things really get bad, we'll have to start talking about helicopter money, which is what former Fed Chair Ben Bernanke has suggested we might have to do in a worst-case scenario. But, you know, I think we all need to calm down a little bit here. Everybody's just getting like hysterical and hyper. I'm not a virologist, but from everything I'm reading, I guess we're all virologists now because we're all reading about it. But my assessment is that, you know, my working hypothesis assumption is that this is going to be comparable to other coronaviruses, like the flu, like SARS, like MERS, and they'll go away. And if they don't go away, we'll learn to live with them. And this, you know, and the economy will revive.
Yeah, just to dig into that a little bit more, Ed, I mean, you could probably make the argument that this is a market that is disengaged from the fundamentals right now, especially since there's so much uncertainty around what things like future earnings are going to look like. So from a technical perspective, I mean, I could say here that we're at highs of the session, and I say that relative to how big the drops were earlier in the morning with the, you know, S&P down 141 points right now. But the fact that you're seeing gold start to come off, down $5, the VIX still above 52, but off the highs of the morning as well. Some of these different indicators, how closely are you watching them from a technical perspective on whether we could be seeing something like a short-term washout?
Well, I do pay attention to all those indicators, but, you know, my job as an investment strategist tends to be focused on the fundamentals. And the economy, up until the virus news hit the headlines, was doing extremely well. So it has some good underlying strength. And if we can just calm down about all this and just deal with it, you know, with standard hygiene, and when you don't feel good, you call the doctor and do what you need to do, I think we'll get through this. And I think the economy will recover in the second half of the year. Analysts right now are cutting their estimates for earnings for the first half of the year. But like me, they're trying to stay optimistic, and they're holding on to their expectations that earnings growth will come back in the second half of the year into next year.
Ed, it sounds like you think the Italians are overreacting, putting 16 million people in lockdown. The French, the Swiss, banning gatherings of 1,000 people or more. You think that's out of line?
Well, look, it's not my job to tell governments how to respond to all this. My job is to see what they're actually doing and what the impact is on their economies, the global economy, and financial markets. And I don't know whether these measures they're taking are too extreme. But to the extent that they are extreme, they probably will do something to contain the virus situation. But we're starting to get some really good news out of China, starting to get some really good news out of South Korea. And if that continues, then I think this panic attack will dissipate, and we'll find that there's actually some pretty good values here.